Sit down and relax as I talk about the thoughts that we all have throughout our day. I'm your host, Jordan Rodriguez. I hope that you share and enjoy. The way this benefits me is that I'll be able to document, refer to, and help others with my journey to $1 million. Why do we invest? I have 4 categories that I'm going to run you through, and these are going to kind of really tell you what type of investor you actually want to be. So we have future retirement. This is going to be someone who invests passively, right? Not necessarily, but depending on how fast you want to retire, this can vary. You have your bloodline. Obviously, you want to invest for your kids and maybe their kids, etc. And then you have the people that want to become super rich off of their investments and capitalists. This goes more into people who invest into companies, not exactly the stock market, but this could pertain to a lot of individual private lenders. And then you also have people who want to maintain wealth. So this automatically gives you your category of kind of where you want to be, right? If you're talking about, investing for your children, you are most likely more than well off to be able to do that, right? You're not making, barely getting by to say I'm going to invest for my kids and their kids, right? And if you're investing for your future retirement, which 90% of the entire population already is, that's really just how it works, right? Like, you want to invest, you already are with Social Security and your 401k if you have one. So these are those kind of plans for future retirement. And I would go as far to say that if you are in the situation where you're only investing into a 401k, please try to learn some things, and we're going to go over those things in this podcast today, where we're going to basically give you a general scope of investing, and just so you know what information is out there so that you can find it by yourself. So, what type of investor are you? That really depends on what category that I just mentioned you're in, right? If you're rich and you want to become a capitalist, I'm assuming you have a lot more risk that you can handle and also are able to handle, right? Like, some people are pretty young. They live at home. They don't necessarily need, to pay any bills. You most likely are in this situation trying to become rich off of your investments or trying to capitalize on your investments. And most of these investments include, like, you're investing into a company, whether that be yours or somebody else's, and you're taking a lot more risky moves, right? Where you're trying to make a lot more money off of, what you gain. You're not necessarily just trying to make 10% off of the S&P 500. And what are we going to invest into? So we have a couple different options, but these are your most solid ones. And I'm not going to go too in depth about these, just because the information's out there already. It's been out for hundreds of years on these kind of things. So you can do more research, but you're going to understand mainly what I mean by invest into. So we have real estate. First and foremost, we're not going to talk about just your property, right? Yes, you can say that your house itself is an asset because it's increasing in value, but a lot of people get this wrong in the sense that your home, you're still paying a ton of interest on, and a lot of people neglect that. I've seen a lot of people say, "Oh, your house is an asset. Your house is, it's increasing in value." Why that's true? While it's true, yes, your house is increasing in value, you're also paying triple the mortgage by the end of, your 30-year term. So that amount, even if it goes up, 10, 20%, even if it goes up 100%, you're still losing 30 years later 1/3, of the total amount or whatever. All right, so it's not necessarily the best investment when it comes to real estate. There's a lot more options, and you want to be smart about how you get into the real estate game. You are in the game once you're looking for a house or you're looking to rent. So this applies to everybody. It's just housing. It's how it works, and you should try your best to understand it because of the fact that it will be handy and it can completely change your entire life when it comes to you renting instead of buying, or you spending more money in certain areas. Like, it can really change, your trajectory if you play your cards right. And these cards include you not putting all your eggs into one basket of real estate, but also maybe stocks, bonds, and S&P 500, let's say, or gold and silver. Like, there's a lot more options out there that are pretty good that you can do that are less risk included and besides real estate. And you also don't get a $200,000 mortgage depending on where you live in debt. So it's give and take, right? So when it comes to real estate, the best thing that anyone can do, and I would suggest this to anybody, if you're a first-time buyer, definitely house hack. What this means is basically live in one of the three or one of the two units in your home, where let's say you buy a 2-3 family home and you rent out the other two sides. This is going to completely, hopefully, if you do your numbers right and get a good deal, you should be paying nothing on your mortgage. If you have a 2-family, it's a lot harder to do that. So you can neglect the whole concept of everything being paid off because it's just 2 families. So don't, focus on them to pay your entire mortgage, but they will pay a big chunk. So, like, with that being said, depending on, how high your mortgage is, they'll be able to pay for a good amount, like 60, maybe even 75% of your mortgage. Because if you were running a real rental property, you'd kind of want both sides to be paying 75% of your mortgage, whatever that is, so that you can make 50% top line on the total amount that they pay you, so that you can pay the mortgage and obviously make some rent. I don't know those exact numbers. You do want to get roughly between 6 to 10% ROI on your entire rental properties. So I'm going to kind of go over that right now. So 10% ROI, return on investment, is just a simple term that everybody uses. So basically you calculate this by multiplying the entire value of your home, times it by whatever percent you're looking for, whether that be at 6, 7, 8, or 9, or 10. And then that gives you your value, right? That gives you how much you want to rent total, right? Then minus that by the mortgage, or add the mortgage to that, and then divide that by 12, I'm assuming, and that's going to be your actual numbers. That's going to be what you want to be making every single month in that ballpark, right? You're not going to make that perfectly because of the fact that there's a number of things that include, there's comps, there's, a bunch of things, but that's where you want to be around. And also, don't forget to include... Hey, really quickly, I just want to say thank you for listening to this podcast. I actually don't advertise for this, and all the money that I make, I put straight into donations. So, all that I ask is that you have a blessed day and continue to listen. Maybe even leave a review. That would mean the world to me. I hope you enjoy the rest of this episode. And also, you can find me on all other social platforms. It's most likely going to be JRodSocial9. Repairs or replacements, anything, any renovations. There you go. That was a word. So you want to save for these, I lost the damn word again. You want to save for these reoccurring costs over the past, over the next 30 years, the renovations that are going to happen that you're you're going to need to pay for. Because you got to look at it like it's a business, and you want that business to last forever. Then that means that you want, all of that wealth. I mean, you want to preserve that home and make it, last forever. You need to have a way, something to fall back on so that it pays for itself, essentially, and you're making as much money as you can while maintaining the house's equity and value and keeping it as safe as possible. Right? So that's really the majority of real estate when it comes to housing. You really want to understand, why are you going to rent? You rent short term, not to get into debt. You get into debt when you're ready to get into debt, or you pay off the entire house's value. And I know that a lot of people are going to be like, you're stupid. You're paying $300,000 for a house. Go buy rental properties. While this is true, depending on your risk to reward ratio or what you really want at the end of the day, it's really just up to you, right? Because I'm younger than most, so I would say that investing into, rental properties is going to be the main thing. That is the most important thing for me. So, but at the same time, I still argue with the thought in my head of whether or not I'm going to pay these off in full or not. And the reason why is because I do trust Dave Ramsey a lot when it comes to investing. And he has built a massive amount of wealth with, no debt at all. So I really look up to that in terms of investing, and, how risk-free that is. Like, you don't have a mortgage. You don't have to worry about it. So it's completely, it's completely depending on where you are and how things can go. So you want to look at renting, you want to look at mortgage, it's up to you. If you want to look at rental properties, I gave you a little kind of calculation right there about ROI. And also, apartments and complexes, you know what the heck you're doing already. Like, you don't even have to learn that much about the basics of real estate anymore. You're literally preaching it. So in terms of other investments as big as those, I'd say start off small, and you'll start to understand what, you'll grasp what everything means. And so that's the best way to go about, utilizing real estate. And there's a lot of more ways. Like, there's real estate agents, then you have brokers. There's so much jobs when it comes to real estate. It's not even funny. So there's definitely a lot in that industry that you want to look into. That's perfectly fine. I'm just going over a general approach for you as an individual who wants to rent, get a mortgage, or buy out your entire property, or maybe even go into a couple rentals. That's my best advice to you. House hack, so that you don't have to pay that much of a mortgage. And, maybe invest a little bit more into your mortgage every year, meaning like do an extra payment by the end of the year if you have the means to. This will save you a lot of years in terms of you paying for your mortgage. I'm pretty sure it'll shorten your mortgage by about 5 to 10 years, something like that. It's something insane. And it also lowers your interest. Now, let's talk about stocks. The big, shebang. If you don't know what stocks are, if you don't know majority of any of it, I don't want to go too deep into this because it's a rabbit hole. If I say one thing, it leads to another. So the best thing that I'm going to lead you to is the S&P 500. So understand that there are individual stocks, and then look at it like there's baskets of stocks. So these baskets of stocks, one of the best ones is known as the S&P 500. And this has the best companies, and it continuously is interchanging. Like, whatever company is doing really bad, they take out, put in another, whatever's performing higher, they get on that list. And they continuously always grow over time because the best companies that are in that basket are going to continue to do better and better. And obviously they take out the ones that are doing bad and replace them with ones that are doing better. So that's how that works. So I'm going to point you in that direction everyone's going to say that, S&P 500 is a really solid investment. But I'm obviously, not licensed to do or tell you any of this information. So don't take any of this to heart when it comes to investing. I'm just some guy that knows a lot and does my research. But don't take any of my advice 1,000% to take me to court. But when it actually comes down to it, S&P 500 is a really good investment. So you want to go down that path. In stocks, I'd say start off with the S&P 500. There's something called VOO, which is a ticker symbol for Vanguard's ETF of the S&P 500. So go on Robinhood, download any brokerage app. It's super easy. It's quick. I know I just kind of gave Robinhood a free thing, but I have them too. When you get into more advanced stuff, you kind of want to go with Vanguard. But the S&P 500 is great. I invest majority of my stocks, if not all of my stocks, are in S&P 500 just because of the fact that individual stocks are more risky. All right, it's as simple as that. You can make a ton more money, but they are so much more risky than the S&P 500. That's because they're individual stocks. They don't have the net range of all the other, stocks that are included with that. Now let's talk a little bit about U.S. bonds, right? So I just bought my first bond about 2 months ago, maybe, to just see how the process works. And bonds are really good. When they come down to it, bonds are great. And the reason for that being is just because it's the U.S. Treasury bond. It's backed by the U.S. government. It's not backed by banks. It's backed by the government themselves. They can print the damn money. They are printing the damn money. If they can't pay you back, everything goes to shit. And I guarantee you that they're going to pay you back. It's as simple as that. So, bonds are a great, they are the best risk-free option when it comes to you want to secure your wealth. You want bonds. Now, let's talk a little bit about banks. Banks are good and bad, okay? Banks take your money, invest it for you. Well, not for you. They invest it for themselves to make more money, and then hope by the end of it, they have majority of your money to pay you back if you ever need it, okay? When it gets past a certain point of how much money you actually have, do not hold majority of your money in banks. I'd say hold majority of your money in bonds, gold and silver, and maybe the S&P 500. That would be my best suggestion. But banks are, I'd say go to a maximum of $25,000 in your bank account. That's it. Do not put anything more than that, unless you really have a portfolio that you have millions and everything else, and you really don't give a shit about not throwing away, but keeping couple hundred grand in your bank, because you do want to go out and probably spend large ass amounts of money, and then you can kind of go with banks. But if you're not on that level, trust me, when it comes to banks, you really want to have majority of your assets in stocks and bonds. I will always say, quote me on this, I don't care. It's simply the best thing to do. You are your worst enemy when it comes to investing. You are your worst enemy when it comes to money. I forget what who said, Alex Ramosi said this. He said, I'm paraphrasing here. He said that the best accounts on investors are the accounts where people pass away, because the people that pass away they can't do anything to the account. So they are the ones that make the most money out of everybody else, because of the fact, well, of course they passed away, but they don't do anything. They don't let their emotions get a hold of them. They made a decision, and that was fine, and it was final. sadly, obviously. But think about the logic behind that. It's as simple as you just never looking at your investments again, and you will have a fuck ton of money. It's as simple as that. So when it comes down to it, honestly, investing is really boring. Put in an average amount that you can put in every day. Put it in and never look at it again. It's as simple as that. And you will become wealthy or rich, depending on how much money you put in, right? So when it comes to banks, you understood that, trust it, but not to 1,000%. I don't want to say, don't trust banks at all, because that's what our economy is built on and so on. But when it comes down to gold and silver, these are great assets to have because they're materialistic, right? They're not a note, right? Paper money is a note from the bank that says the bank owes you this much money. That's all the dollar is. Well, not the dollar. That's what paper money is. It's something that says you owe this much money and the bank owes you this much money. That's all that it is. And that's why we use it as currency. But when you talk about gold and silver, now these two are very, I'd say, solid investments. They're not as good as stocks or bonds, but they diversify your portfolio so good that it's almost stupid not to invest 5%, 10%, a certain amount of your money into gold and silver. It's very fucking important. And it's just so that you have a backup to if, the US dollar tanks. If it tanks, you have gold and silver. And it's just safety. It's a safety net in terms of investing, in terms of your portfolio. That obviously bonds are as safe as it comes. But if the US dollar falls, it fucking falls. There's nothing you can do about it. Gold and silver, on the other hand, kind of give you a little safety net away from the dollar. And I'd go as far as to invest into, to have a certain amount of other currencies. Legit, owning, let's say $1,000 worth of other currencies just to have it in your back pocket is not going to kill you, right? Pick out 5 different currencies, euros, pesos, yen, you name it. It doesn't matter. Whatever you want. And go along those lines. Invest into that, because that will give you, a really good diversification. You will have money in in anywhere, right? So if the US dollar tanks, you're good. You have a certain amount of money in other places. And hopefully that your percentage of 5 and 10% is so much so that you're rich in those countries. All right. Obviously, you are, depending on where you live, a US citizen, so you obviously want to be in the US and you want to be able to have that amount of wealth. But yeah, real estate, when it comes down to it, there's a lot of different ways to invest into it. You really want to be, as an individual, very smart about playing your cards. I gave you a rough, kind of a general approach to understanding it. There's obviously you going out to rent, you going out to get a mortgage, or you going out to house hack or actually get a job in the industry, or buy a bunch of rentals. It's really up to you as an investor, as a person, depending on if you want to get rich in real estate or not. And there's one topic that I really left on the table for the end. That's going to be investing into companies. Now let's talk about your own company, because this is the situation that I'm in right now. And for the most part, it's always been a losing battle until it's not. So you have to understand it like that. It's a losing battle until it isn't. And you need to make sure that you're going to win. And what I mean by that is, don't just run your numbers. Run the scenarios. Run the scenarios that things don't work out. Run the scenarios that things do work out. Run the scenarios where nothing works out. Understand that the robustness of your company depends on you understanding where you can fail, what can make you fail, and how you can really shoot that weakness and shoot that down before it ever takes a hold of your company. So you have to understand that your company does have a health bar. You are taking hits, and whether that be in money or not, this is like a real life game of your money is on the edge and you don't know what to do. That is the game you're playing when you start up a company, your first one at least. And it's not that you don't know what to do, but it does really go into the fact that you have to understand where the robustness is coming from. Where are you as safe as it gets when it comes to your money? Where are you investing your money as a company? What bills are you paying? Who is paying you? When are they paying you? These things are so important to your success, and they're minuscule little things. It's really that's it. It's a matter of you understanding what's coming in, what's coming out, and you have to be on it every fucking day. Because if you're not, then you're really going to struggle. And the reason why you're going to struggle is because you don't know where shit's going. And it's a constant battle every single day. You have to go out, you have to kill, you have to, make moves every single day to better your company. And you have to optimize. I mean, cut shit down that is not being used ever. You have to consistently be on top of the game to really flourish and actually, capitalize on what you're trying to get done. Because that's the most important part, right? You want to be rich, you have to know how much money you have to make to become rich with your company. It's as simple as that. So understanding that shit, it will completely change, the trajectory of your company. Because now you're actually talking about, way bigger topics. Why are we investing into this portion of our company so much? Why are we investing and allocating so much time into this portion, into this section? And that by itself, time, it's priceless. When it comes down to your company, every fucking minute counts. So you really have to have a good amount of time to be able to elaborate on whatever you're doing in your company. And you have to gain as much knowledge as you possibly can. I cannot emphasize that enough. The biggest piece is you basically playing two completely different people. One time you're owning the company, the other time you're learning day in and day out. And when you're running your company, it's like you're in a lab from fucking night to from morning till night, and you're just hitting whatever you can possibly do to get it done, right? Because that's what it's like. You need to stop the bleeding. This is how I like to picture it. Imagine you had a water bottle, and there was a bunch of holes in that water bottle, all right? You have to stop what hole is making the water go out the most. That's your first point. That's where you go first. You attack that. Secondly, you go after the next and the next and the next. There will always be a hole, no matter what. Every single company has them. But you can stop yourself from bleeding. And then you get to the point where you're filling up that water bottle. And that's why these companies that are consistently, having these holes, they get replenished, and it's just the way it works. The best companies have 99% churn or 1% churn. I don't even know. It's one of those two. But the amount that they don't leave the company is so little. That's one of the holes. But then you have other holes. The biggest holes I'd say is churn. because your customers aren't staying with you. And then after that, it's really just a matter of operations, where are things going wrong, etc. And learn to really just work your ass off to be able to, capitalize on your company. And that was it for my general tips on investing when it comes to all of it. I hope that you took a lot from this. And yeah, I'll catch you in the next one.